If you walk down any street in New York, London, or Tokyo, look around you. Look at the bank on the corner. Look at the smartphone in the hand of the person walking past you. Look at the airline logo on the plane flying overhead. Look at the pharmaceutical company making the drugs in the pharmacy. You might think these are all different companies. Competing in a free market, you might think you have a choice. But if you peel back the layers of corporate ownership, if you follow the money all the way to the top, you will find that almost all of these companies have the same top shareholder. It's not a government. It's not a royal family. It's a company called BlackRock. BlackRock manages over $10 trillion in assets. That is more than the GDP of every country on Earth except the United States and China. They are the largest shareholder in Apple, Microsoft, Amazon, Google, Facebook, SEO Mobile, Pfizer, and almost every other major corporation you can name. But their power isn't just about money. It's about a piece of technology, a supercomputer system hidden in a data center in Wenatchee, Washington, that effectively runs the global economy. It's called Aladdin. And today, we are going to dive deep into how a single asset manager became the fourth branch of government, how their software decides the fate of nations, and why some people believe they are the architects of a new form of capitalism that you did unvote for. To understand BlackRock, you have to understand its founder, Larry Fink. In the 1980s, Larry Fink was a star at first. Boston, a major investment bank. He was a pioneer in creating mortgage-backed securities, the very same financial instruments that would later cause the 2008 crash. But back then, they were a gold mine. Fink made the bank $1 billion. He was a king. And then, he lost it. He made a wrong bet on interest rates, and in a single quarter, he lost First Boston $100 million. He was fired. He was humiliated. But in that failure, he had an epiphany. He realized that Wall Street was flying blind. They were making massive bets without fully understanding the risk. They didn't have the technology to see the whole picture. So he decided to start a new kind of company. A company not obsessed with making the highest return, but obsessed with risk management. He founded BlackRock in 1988 in a one-room office with a few partners. His pitch was simple. I will build a machine that sees the risk you co-UNC. That machine was Aladdin asset, liability, debt, and derivative investment network. At first, it was just a risk calculator. But as BlackRock grew, Aladdin grew. It started ingesting data, not just stock prices, but interest rates, currency fluctuations, weather patterns, geopolitical events, and consumer spending habits. It became a simulation of the world economy. Today, Aladdin is the operating system of global finance. It doesn't just manage BlackRock's $10 trillion. BlackRock leases Aladdin to other massive entities. Vanguard uses it. State Street uses it. The largest pension funds in Japan use it. Apple uses it to manage its cash pile. Even the Federal Reserve uses it. When the 2008 financial crisis hit and the U.S. government needed to save the economy, they didn't know which banks were toxic and which were safe. They didn't have the data. So who did they call? They called Larry Fink. The U.S. government hired BlackRock to analyze the toxic assets of Bear Stearns and Agay. Essentially, the government outsourced the rescue of the global economy to a private company because only that private company had the God view through Aladdin. This centralization creates a bizarre paradox. We are told that capitalism is about competition. Coca-Cola versus Pepsi, Ford versus GM, Apple versus Microsoft. But if BlackRock owns 7% of Coca-Cola and 7% of Pepsi, do they really want them to fight a death match? No. They want both to be profitable. They want stability. This is what economists call common ownership. When the same few institutional investors own all the competitors in an industry, the incentive to compete aggressively diminishes. Why lower prices to steal market share from your rival if your owner also owns the rival? It's better to just keep prices high and dividends flowing. Critics argue that this is a hidden monopoly. It explains why airline ticket prices are high, why drug prices don't drop, and why innovation seems to be slowing down in mature industries. The competition is an illusion. The ownership is singular. But BlackRock's influence goes beyond passive ownership. Larry Fink writes an annual letter to CE. It is arguably the most important document in the business world. In these letters, he tells companies what BlackRock expects. In recent years, he has pushed hard for ESG, environmental, social, and governance criteria. He told CEOs, if you don't have a plan for climate change, if you don't have diversity on your board, we might vote against you. Because BlackRock owns such a massive chunk of voting shares, CEOs have to listen. This has sparked a massive political backlash. Conservatives argue that BlackRock is forcing woke capitalism on the market using other people's money to push a political agenda that wasn't voted on by the public. Liberals argue that BlackRock is just greenwashing, pretending to care about the planet while still being the largest investor in fossil fuels. Both sides are right, and both are wrong. BlackRock isn't doing this out of morality. They are doing it because Aladdin told them to. Aladdin's algorithms predict that climate change is a financial risk. If the sea level rises, real estate portfolios collapse. If carbon taxes are introduced, oil companies lose value. Fink is hedging his bets. He is managing risk, just like he promised in 1988. The scale of Aladdin is terrifying to comprehend. It monitors about $21 trillion in assets. That's essentially the size of the entire U.S. economy. It runs Monte Carlo simulations every night, thousands of scenarios. What if Russia invades another country? What if a new pandemic hits? What if inflation hits 10%? Aladdin calculates the impact of these events on every single stock, bond, and derivative in its system. It tells portfolio managers what to sell and what to buy. This creates a feedback loop. If Aladdin thinks a certain asset is risky, trillions of dollars might move away from it simultaneously. Could Aladdin cause a crash just by predicting one? It's a possibility known as herding behavior. If every major bank and fund is using the same map to navigate the market, they might all drive off the same cliff together. Let's talk about the revolving door. The relationship between BlackRock and the U.S. government is seamless. Former BlackRock executives move into high-ranking roles in the Treasury Department and the White House. Former government officials move into high-paying roles at Brian Dees, who was the director of the National Economic Council, came from Adewale Adeyemo, Deputy Secretary of the Treasury, came from Black. Critics call it government Sachs. Used to be the insult for Goldman Sachs, but now it's BlackRock government. This proximity gives them influence over regulation. They help write the rules of the game they are playing. When the government decides on financial policy, BlackRock is often in the room, not just as a participant, but as a consultant. Another aspect of their dominance is the shift from active to passive investing. In the old days, you picked stocks. You tried to find the next Apple. Today, most money flows into ETFs, exchange-traded funds. You buy the S&P 500, you buy the whole market. BlackRock's iShares brand is the king of ETFs. This sounds great for the average investor, low fees. Instant diversification. But it means that money flows blindly into the biggest companies. If you buy the S&P 500, you are automatically buying Apple and Microsoft, regardless of their current price or performance. This blindly inflates the valuation of the top companies, creating a winner-takes-all dynamic in the stock market. It disconnects the stock price from the actual fundamental value of the company. It automates the bubble. Is BlackRock evil? That's a simplistic question. BlackRock is a machine. It is an engine designed to maximize efficiency and minimize risk for capital. It does exactly what it was built to do. The problem is that it has become so big that its internal logic has started to overwrite the logic of democracy and the free market. When one company holds the voting rights for the majority of the corporate world, they effectively become the central planners of the economy. Larry Fink is not elected. He is not accountable to the public. He is accountable to his shareholders. Yet, his decisions regarding energy transition, corporate governance, and capital allocation have more impact on your life than most laws passed by Congress. Think about the housing market. BlackRock and other institutional investors like them are buying up single-family homes. They are turning a nation of homeowners into a nation of renters. Why? Because Aladdin sees housing as a stable asset class with good yield. It makes financial sense. But socially, it prices young families out of the market. It destroys the American dream of ownership. This is the friction point. What is good for the portfolio is not always good for the people. We are entering a new era of asset manager capitalism. The titans of industry, Rockefeller, Carnegie, they have been replaced by the titans of allocation, the people who don't make anything, but who decide who gets the money to make things. BlackRock is the apex predator of this system. They have achieved what no empire in history could: global control without a standing army. They don't need soldiers. They have Aladdin. They don't need to conquer territory. They just need to buy the index. So, what happens next? There is growing scrutiny. Both the populist right and the progressive left are attacking BlackRock. There are talks of antitrust actions. There are states pulling their pension funds out of BlackRock management. But untangling BlackRock from the global economy is like trying to remove the nervous system from a body without killing the patient. They are too big to fail and too big to exist. If Aladdin were to go offline tomorrow, or if it were to be hacked, the global financial system would freeze. We are dependent on a proprietary black box to tell us what our world is worth. This story matters because it reveals the true structure of power in the 21st century. It's not about politicians shouting on TV. It's about silent flows of capital directed by algorithms. It's about the quiet consolidation of ownership. It is about the fact that the market is no longer a chaotic bazaar of millions of buyers and sellers. It is a curated garden managed by a few giant firms. You are living in BlackRock's world. You are using their products, renting their homes, and your retirement is sitting on their servers. Understanding this isn't about conspiracy theories. It's about financial literacy. It's about knowing who holds the cards. If you want to navigate this world, you cannot ignore the elephant in the room. You have to understand how ETFs work, how institutional flows move markets, and how risk is calculated. You have to think like Aladdin, because if you are betting against the house, and the house owns everything, you are going to lose. The rise of BlackRock is the story of the ultimate victory of finance over industry. It is the story of how data became more valuable than oil. And it is a warning. Concentration of power, whether in the hands of a state or a corporation, always leads to a distortion of reality. Aladdin tries to model the world, but eventually, it starts to shape the world to fit its model. The map becomes the territory, and we are just dots on that map, being moved around by an invisible hand that doesn't care about us, only about the yield. If you are a developer or a data scientist, look at Aladdin not just as a financial tool, but as the ultimate software project. It is a system that ingests the world and outputs decisions. It is the precursor to an AI-managed economy. The engineers building these systems are the new architects of our reality. The code they write determines who gets a loan, who gets insurance, and which companies survive. The responsibility is immense. And for the rest of us, the lesson is vigilance. We need to demand transparency. We need to ask questions about corporate governance. We need to understand that passive investing has active consequences. The convenience of the modern financial system comes with a cost: the loss of agency. We have handed the keys to the kingdom to Larry Fink because he promised to keep us safe. But safety is not freedom. And in the end, the question remains: who watches the watchers? Who manages the risk of the risk managers? Right now, the answer is nobody. And that is the biggest risk of all. If you found this analysis eye-opening, if you want to understand the deeper layers of how technology and finance intersect to control the world, consider subscribing. We dive deep into the mechanics of the machine. We don't just look at the surface. We look at the source code of society. Share this video if you think more people need to know who really owns the world. because knowledge is the only asset that BlackRock cannot buy. The future of capitalism is being written in lines of code in a data center in Washington state. Whether that future is a utopia of efficiency or a dystopia of control depends on how much we pay attention. Don't be a passive investor in your own future. Understand the system, see the risk, and play your own game.